All right, let's do this, everybody. So today's date is now Sunday, January the 19th. It's about 4 p.m. Central Standard Time here in beautiful Manitoba, Canada. And it is snowing so hard outside that my vehicle is actually caved in. What are my plans for the day? I decided to rent an Airbnb loft for my lady and I, just to have a date night. If you can't take her on a vacation outside of the city, you may as well take her on a vacation inside of the city. Before we start, I just want to give you guys a refresher of what the Udemy Course 1 and 2 and 3 have to offer. You guys are welcome to pause this page right now just so you can get an idea of the curriculum. This is Course 1. This is Course 2 and what it offers. Course 1 is more an introductory course that talks about the fundamentals and the importance of training and the indicators and the strategies and what I personally use myself. Course 2 is a lot more detailed. Course 2 ends up talking about a little bit about what defines a good trader from the average trader to a very good trader and the mindset that you need to have in order to thrive and succeed in this industry. And then Course 3 refers to a documentation process where I narrate my thought process. I list the reasons for entering the trade. I document the process during the trade. I go through risk to reward in detail. I keep a master tracker of all trades taken. And then I review all the trades at the end or before, during, and after 24 hours. And then I review all of this and I show you guys through 9 live trades growing a small account from $2.3 thousand to $3,000 in one single day, which is pretty cool. So you guys are welcome to pause this. So you guys get an idea of it. So what's going on in the next few weeks? I'm already about 40% done filming Course 1 and Course 2. It's going to be completely revamped. You might get some new information out of it, but it's more so just restructuring the course itself. So it's much more structured and has a better guideline of how to proceed from my personal perspective. The people that already have Courses 1 and 2 will have it for free. The people that don't have it already, you're probably not going to be able to access it. And if you do, the price is going to skyrocket because I got to value myself. And I do firmly believe that it is a course that is worth investing in simply because it's one of the courses that is a fraction of the cost of what other people offer. And I firmly believe that the material is also better. So right now, till the end of January while I finish this new course, guys, if you guys have access to Course 1, 2, and 3 already, you'll get it all for free. So till the end of January, you guys will still be able to get it for 190 American dollars through Ethereum. And if you guys can look at the address below, all you got to do is send the 190 American dollars for Course 1, 2, and 3 that you'll get access to, and you'll get the newly revised and edited course for absolutely free. And if you don't have it for 190 American, I'm only going to release 100 of these courses to people that don't have it already. But the price is going to be much more than that, and it's going to blow you away what the price actually is. And the reason that I am doing this is simply because I would like to value myself. And that to me is incredibly important. So I'm just turning down my music a little bit here. All right, let's get into this technical analysis for the day. So today, this is what we will be covering, okay? So what I will be covering today are these specific topics here that we will go through together. So listen up, your mama whale's talking. Today's topic will cover the following in the video released in 1 hour. WXYZ, what does that mean? It's so OPP. Yeah, you know me. Number 2, we're assuming parallelity. What next? 3, hidden bearish divergence. 4, bam, the rising bearish wedge held true. So check this out, guys. Do not ever mistake this for luck, okay? This is a prediction that I made. 1, 2, 3, 4, and a possible 5th wave to complete the 1, 2, 3, and the 4, and the 5. And yes, guys, it is possible to have a rising bearish wedge that usually breaks to the downside. And guess what ended up happening? We were at $8,962, and surely enough, this is exactly what happened. 1, 2, 3, 4, and a 5 going to the upside. So let's get right into this technical analysis without further ado, and we're going to see how this ends up playing out. So first of all, we're going to talk about topic number one. Topic number one will deal with WXYZ. For those that are unfamiliar with WXYZ, let's get into this very quickly, okay? So WXYZ goes something like this. So the reason why we called it a WXYZ is because first of all, we have an ABC correction that comes to the downside, okay? Right here. And then now we should technically get a impulse wave to the upside. But sometimes you only end up getting, for example, 3 waves to the upside instead of a 5 impulse wave going to the upside. This right here is what I call the first ABC to the downside. And then we should get an impulse wave going to the upside. Sometimes we don't get all 5 waves, and if we only get, for example, 3, then this X right here marks the spot and denotes. So once again, this X is a denotation for going to the upside, where we fail for an impulse wave up. So this section is the failed attempt to the upside. How does it fail? Many different possible ways. Let me give you a clear-cut example of how a wave could fail. Let's say we get 100% retracement or more. Okay, it can only retrace by 99.999999999 repeating. But if for some reason wave 2 ends up retracing more than 100% to the downside, then what we get is a failed impulse wave up. Sometimes you only get 3 waves up, 1, 2, and 3. If wave 4 falls heavily between the wave 1 and wave 2 territories, most of the time I would assume that there's a high chance of failure. If wave 4 falls well below the wave 2 territory, for example there, then that's also a failed impulse wave, okay? And of course, sometimes that's usually how it ends up failing. Or wave 5 ends up being very, very heavily truncated, and then we get a retracement much further than where the wave 0 originally began, okay? Right here would be wave 0, if you look at this as the point of origin. So if it ends up failing, right here, 0, 1, 2, 3, 4, 5, with an A, B to the C, where C ends up retracing 100% of this original structure of wave 0, then we can easily deduce as well that the failure is imminent, thus proven that the wave has originally failed, okay? So just giving you guys a clear-cut example. And then, if that wave fails, we now move on to this structure right here. And this structure would be called a double Elliot wave structure, okay? I'm just going to move the camera so you guys can see it. Right here, it would be called the Elliot double combo wave, WXY. And then, of course, there's the WXYZ as well. Okay? So then we would normally get another ABC retracement just like this right here. Right? And then the same thing can repeat. We get another wave to the upside. Sometimes it's a 3-wave combination like that. And then if this ends up failing again, then we get the triple Elliot wave combo where it ends up making another ABC to the downside. So this is very important because it's always a good refresher to understand the dynamics and the possible paths of how this can be taken. So now that we're going to talk about the WXYZ, and there is a clear-cut example of what's going on, we can all agree right now that this right here could most likely be a WXYZ. We have gone over it in high detail before, therefore we do not need to go over it again, okay? So this is what my prediction is right now, okay? So we're going to combine, assuming parallelity, WXYZ, just like this for you and me. So now let's draw this parallel channel right here. I always listen to some type of classical music. Why? Because it calms me down when I'm listening or when I'm trading, and especially calms me down if I'm doing technical analysis as well. We have to listen to types of music that's going to be conducive to our mood. Last thing we want is something that can bring our mood up too much or too little, right? But something that's going to allow us to have a very conducive ambience that's going to allow us to thrive and think accordingly, rather than something that might be overwhelming. So this is the way that I'm personally looking at this right now. I see this as a major resistance to the upside. Guys, for those that have been tracking my accuracy rate, I think you all know that my accuracy rate is well over 80%, right? So always take this with a grain of salt, as always. Just waiting for my lady to get over right now, because we rented a cute little Airbnb where we're gonna hang out in and have a date night in the city. So I'm actually very excited for that. Just give me 1 second, guys. Alright, so here we go, okay? 5K would be one of my particular targets. Why would it be 5K? Let me explain to you. Okay, let's go into this in higher detail right now. I need a new laptop, guys. My monitor broke. But it's very expensive, right? Doesn't matter how much money you have or how little you have. Everybody should always be on a budget. And after the Christmas holidays, I'm certainly on a budget as well, right? My laptop monitor to replace alone is literally $650 just for the monitor, because it's an IPS 4K screen that's also a touch screen. So it's a little bit frustrating right now that I'm using a laptop without a monitor and it only works through a video output. But anyways, so we see this ABC here first. A, B, and C, okay? And then we see an ABC to the upside. Just like that, right? So we see this ABC right here first. A, B to the C. I'm not going to bother annotating them properly. And then we see this ABC to the upside as well, right? Or sorry, this is A, B, and C right here. And then we see this impulse wave attempt going to the upside, which ends up actually failing because it doesn't even make a fifth wave. So because that actually ended up happening, between the X and the Y, we end up getting another ABC come to the downside that actually ends up making 5 perfect waves, in my personal opinion, which was just absolutely beautiful, which set the pace for the 1, 2, 3, 4, and 5. And then we get an X attempt to the upside, okay, with a huge impulse wave up. But it has already been established because of the parallelity that we see very clearly that this could have been a very huge peak of breaking to the upside, okay? Now some people would even do something like that, but no, not me. Not me right there. I'm not gonna bother adding a median. So what concerns me right now is how this is actually looking. Okay? So the way that I may look at this right here is complicated in my opinion. Okay, the way that I'm possibly seeing this is this a 1, 2, 3, 4, and 5, where the 5 was actually truncated, okay? If that were actually true, then we're looking for an ABC to the upside, which this could hold true right here as well, okay? 1, 2, 3, 4, 5. And if that were true as well, then that would also mean that this right here would be the A, B, let's say we retrace this to down here, and I would assume a very small C. And if that were actually holding true as well, or it could even be, you know, more steep, I'm giving you guys some alternate paths where the C could end up getting heavily truncated, and then we get a huge drop. 1, 2, 3, 4, and 5, hitting right around the 5K range, which officially completes the Z structure. Is that possible? Absolutely. It is possible as well, right? We got to make sure that we understand that this violent drop that we just had was fairly violent. Okay? So now that we cleared that up already as well, what next? We're assuming parallelity. We're assuming that the C could possibly hit the top side of this channel because we assume parallelity. And for number 1 reason that we're going to cover, okay, WXYZ right here, we can also assume that there could be one more final 5 subwaves dropping to the downside, okay? Now, I want to also talk about number 3, hidden bearish divergence. Hidden bearish divergence is basically, there's 2 types of divergences. Let me show you guys. Okay, now let's talk about bearish divergence in general, okay? Hidden bearish, normal bullish divergence refers to this. When on a drop to the downside, okay, for bullish divergence, we're looking for a reason where when we're getting a lower low on the price, we're getting a higher low on the actual, for example, RSI. If we're getting a lower low on the price, but we're getting a higher low on the RSI, that means that we're finding reasons that it's gaining strength, gaining momentum. And then on the flip side, for normal bearish divergence, when we're getting a higher high, but we get actually a lower high on the actual RSI, which shows that we're losing strength and momentum, so it's more likely to break to the downside. But when it comes to hidden bullish divergence and hidden bearish divergence, what we're actually doing is we're looking for continuation, okay? So for example, if we're getting a higher high for hidden bullish divergence, but we're getting, for example, okay, on the other side here, we're getting a lower, okay, we're getting a lower high right here, okay? We're now comparing that peak and that peak. We're comparing the lows now for hidden bullish divergence. This one right there and that one right there, and then this one right there and that one right there. If we're getting a lower low on the RSI, but we're getting a higher low on the price, then that means that there's a strong chance that this will continue to the upside. Make sense? Okay, I hope that does. Rewind that if that doesn't. Now on the flip side, for hidden bearish divergence, we're now going to be comparing the highs, okay? We're going to compare that high and that high versus that high and that high. So we want to find continuation to the downside, okay? So now if you're getting a lower high on the price, but now you're getting a higher high on the RSI, then that means that there's a strong chance of it continuing to the downside. So once again, normal bullish divergence and bearish divergence is simply referring to finding something that will looks like it's going to reverse, where the momentum is oscillating to a changeover. But then if you're looking at hidden bullish or bearish divergence, that's referring to continuing the trend, okay? So now let's give this an actual thought right here and see what I'm referring to. Let's go to, for example, the 4-day. Or sorry, the 4-hour right here, okay? Actually, let's go to the daily. Okay, let's go to the daily right here. Now, if we go to the daily right here, what we're seeing very clearly, if we compare that peak right there, and that peak right there, and that peak right there, and that peak right there, what we're actually looking at right here is that this right here is a higher high on the RSI, correct? Yes, but here is a lower high on the actual price, okay? So because this is a lower high, but that is giving you a higher high on the RSI, then that is what you call a hidden bearish divergence. That could continue to the downside, okay? That makes sense? Might need to listen to that a few more times, okay? If that didn't make sense. So now we're going to talk about number 4. Bam! The rising wedge held true, okay? So check this out right here. Let's go to a 2-hour chart right here, okay? Where we were comparing this in particular, okay? Where this could simply be just 1, 2, 3, 4, 5 for that particular one right here. So if that were the actual case, all right, great. That could possibly be it. If this were the actual case. Now, if I go to the 4-hour just as an example, it could also not be this way at all, okay? The way that this could also be is like this. Okay, so now this could also be, if this were, now I'm going to counter argue myself, right? So now that could be 1, that could be 1, 2, and that could be 3, and that could be 4, and there could be a 5. So there could still be a massive breakout where wave 4 actually ends up breaking well above there. Okay, wave 4 ends up, wave 3 ends up bouncing well above there, and then wave 4 ends up bouncing above the resistance because the resistance ends up turning into a support. Okay, does that make sense? So then the way this would work, if we use a Fibonacci extension right here, we would actually get a pretty decent number. Okay, this actually makes a direct one-to-one touch. Now if this held true as well, we're taking a look at 1, 2, and this could be 1, 2, 3, 4, and a 5, just like that. Okay, and this could be a 4. Who knows? It can come here to the maybe wave 1 territory, and then maybe a little bit lower to even 8,300, and then bam, we break to the upside, going something like that, okay? And then wave 4 ends up coming to the downside because anything that was previously a resistance ends up becoming a support, and anything that was a support ends up becoming a resistance. So then we got 5 clear structures of 1, 2, 3, 1, 2, 3, 4, and the 5 to the flip side. Okay, so right now, where is my stance? I couldn't even begin to tell you, folks. Okay, what I do see is that we ended up, bouncing above 8,400 by $300 in the past few hours, which is a 3.3% correction, right? But now I don't see any ABCs quite yet, but I do know for a fact that this right here around the $8,800 range is going to be a heavy resistance to the upside. Okay, that was a really large sell volume right here. The sell volume was huge. Ended up selling on Bitfinex here about 4,000 Bitcoin. So let's go to CMC right here. So right now we're seeing the volume at $34 billion. Bitcoin dominance is actually skyrocketing right now. Yesterday's Bitcoin dominance was at 65.9%, so we've actually gained a solid 0.6% to the upside. Okay, and now if you take a look at this right here, the 24-hour volume, we go to historical data right here. What we see is that we were moving to the upside 44 billion, 40 billion, 31 billion, 36 billion, now 32 billion. And today we're looking at about 34 billion. So the volume has definitely increased. So what does this mean? It means that people are starting to show a lot more interest in Bitcoin right now, and they're trading it more than other coins, since Bitcoin is now at a dominance of about 66.5%. Okay, and we actually have moved up quite a bit. That was a pretty violent drop, wasn't it? Ended up dropping about 8%, which is a huge drop. So where do I particularly stand, guys? The way that I stand right now is we need to break well above here, and we need to find some solid support first. My particular idea of a solid support would most likely be around this particular structure right here. Okay, I would love to find support, in my personal opinion, anywhere between 8,400, even 8,400 to, we'll say, 8K and up. If that held true, where we ended up retracing only to there, then that would mean, from my personal perspective, that the wave 3 territory would be correcting roughly to the 0618 Fibonacci region for the golden ratio. And if that actually held true, then there's a very strong chance and a contender for a possible wave 5 going to the upside. Okay, now if we break well below that and we hit, for example, the $7,700 range, then I would probably agree with myself that this is probably the wrong count right here in general, and that this could have been just generally speaking 1, 2, 3, and a huge correction to the 4 side to 7,700, and then we get 1 to the upside going up. So guys, I'm going to summarize this video very quickly since I don't want to take too long. Okay, I believe that for us to be bullish, okay, we need to maintain a stance well above 8K. 8K needs to hold. And of course, if we break above these particular ranges right here, okay, if we break above these particular ranges right here, this, I'm talking about the assuming parallelity in that channel, right? If we break above that particular channel right here with a lot of conviction and the volume actually ends up skyrocketing, then there's a very strong chance that we could hit the $10,000 range. So that is the bullish side right here, where we're gonna go into a long position, breaking as long as we hold above the $8,000 range. Beautiful risk to reward scenario as well. Say we go to 10K, setting the stop for about 2%, 7.36% right here, or 7.36% RR, or sorry, 7.36 to 1 risk to reward ratio. Okay, that's pretty amazing in my opinion. And then for the short side, of course, I'm not going to short anything until it drops below this golden ratio range, and my target will be roughly right here, because then I would expect it to drop to roughly these particular regions right here, just based on very simple supports. Okay, and if that were to actually be true, then maybe that's not the right count, and then maybe this would actually be the right count instead for an alternate path, right? And then we get a chance to hit the 10K. So if this actually held true, I would be shorting it with a 2% possible loss, and I would be still going for roughly a 6 to 7% gain with a 3.38 RR, which means that that's still a very, very amazing play in my personal opinion. And then if that ends up holding even true for what's happening, all I see is opportunity, okay? And then if that actually held true and we held at the golden ratio, take a look at this, okay? Here's your Fibonacci structure right here. And this would be fairly decent in my opinion. Getting to the downside, even the lower side, right around here. Yes, it can overlap, gentlemen. Right around there. And if that were to hold true, okay, let's just say I took the average at the golden ratio right there, going for say 3% stop right here, allocating a much higher R unit, and going for 10K, I'm now with a 34% possible gain. Like, you know, I'm only seeing opportunity right now, right? That's an 11 to 1 RR. So guys, there you have it. These are my thoughts for the day. Once again, if you guys don't have access to my Udemy course yet, guys, it's very limited. I'm telling you right now that the course 1 and 2 that's going to be released is going to be quite epic. You're probably going to learn a few things here and there from it, because I've had a lot more years under my belt, especially as well. Okay. And on top of that, it's only 190 American dollars right now, which is actually pretty cheap. And I'm pretty sure it's going to go up to about $800. And I'm only going to release like 100 of them if you don't have access to it already. So my advice is, if you're interested in my course, make sure you guys contact me and I'll see what I can do to help you as well. So have yourselves a great night. I hope to see a lot of you guys be interested in my course, and I'll see you absolutely tomorrow for a much more detailed Elliot wave count and see how this market will trend. Have yourselves a great night, everybody, and thank you very much for watching my videos. Bye now. Take care. It's time for date night. You guys are not going to see me till tomorrow. Take care.